And welcome back to the Halftime Report. I'm Bob Pisani. It's time now for ETF Edge. The dollar is up nearly 2%, 2.5% against the euro this year, which means you could be taking a big-time hit on your overseas exposure if you're not hedged. So how can you make the most out of Europe? Let's break it down. CFRA Senior Director Todd Rosenbluth, ETFTrends.com editor Tom Lydon here. And Tom, it's back again with the dollar strong this year. We didn't pay any attention to currency hedging and ETFs for a while now, but it's starting to make a difference. If you look, the Vanguard Europe ETF up 7% this year, but the hedged ETF, currency hedge, up 13%.
Right. Makes a big difference, Bob. And as you point out, we haven't been paying attention to currencies for a while. But now, especially with the trade wars going on, Xi talking about undervaluing the yuan, and that's going to happen across the board. Dollar continues to be strong in the U.S. If you don't hedge your currency with your overseas investments, you're betting on that local currency. So why not take out that risk?
And yet, why don't people do that, Todd? I mean, these currency ETFs, frankly, they bleed money, right? They haven't attracted a lot of money in several years. Japan did a while ago. You have less volatility with them because you're taking out the currency. Why aren't people using them in a bigger way?
Well, these were very popular, as you mentioned a few years ago. You used to see Wisdom Tree commercials every minute on CNBC, and now HEDJ has bled $8 billion in the last 3 years. It's now a $3 billion ETF, despite the fact, as you mentioned earlier, it is outperforming other European ETFs.
Is that going to change now that we see currency as a major issue?
Well, we have to see if the dollar continues to strengthen. If it does, then investors might take a closer look at wanting to reduce the volatility of their international equity portfolios.
Okay, and Europe is not the only place where the currency effect is hitting portfolios. In emerging markets, a hedge could be a difference between positive and negative returns in 2019. We've got a way to play that too. And Tom, emerging market ETF here, flat for the year. A currency hedged emerging market ETF, the symbol is HEEM, up about 4%. Again, here you see the difference.
Same thing, Bob. And if you're looking for valuations, everyone's talking about the great valuations, almost 40% off in PEs compared to the U.S. Why not look at this? But mostly, if China devalues their currency, emerging markets are going to follow.
Before I let you go, I got to mention there's an ETF for every country in the world. The Argentinian ETF, ARGT, getting hit hard here. Macri, over the head of Argentina, of course, got trounced in the primaries. There's some concerns that his old opposition, the Peronists, essentially, might be back in. What do you do here with these?
Well, and the same thing we saw last year. We've seen Brazil, we've seen Greece, and then all of a sudden they turn around. So if you're tactical in nature, that might be something to consider.
Okay, Todd Rosenbluth, Tom Lydon, thanks very much for joining us.